Good morning, I'm Nigel Croft and this is TA for Traders, and this is the second video of Tuesday the 7th of March. In this video we're going to be looking at the minor currency swaps. On the loonie, the US dollar against the Canadian dollar, we're seeing that the dollar's rallied into resistance. On the New Zealand dollar against the US dollar, we see that it's fallen, again with dollar strength. The New Zealand dollar's fallen into support. On sterling against the euro, we're expecting a short-term bounce, but the trend is now negative. Aussie dollar against Japanese yen is just range-bound. And finally, on the euro against the Swissy, we are expecting further upside, a complete change around from last week. So, on the Canadian dollar, US dollar against the loonie, we can see the very dynamic rally that we've seen in the dollar over this last week. Took it through the resistance of the 50-day. It went through so strongly. There was a bit of pullback during the day, but it just carried on through the day, and that really has switched the upside momentum to the positive, and both on the RSI and the MACD. So a very positive picture. What now? Well, the RSI has started to indicate overbought. It's at the 68 level. We're into the resistance that can be seen back in November and then again at the end of December when we had that double top. That is going to cause some trouble for this market, and really a consolidation, a rolling pattern. There may be some short-term upside, maybe up to the 135, but really it's not going to go much higher than there, and I would expect the market to roll and then maybe even come down below the 133 and maybe start to test the supports at the 132 level. On the longer term picture, you can see this rally into the resistance. Quite good that it's moved back above the 20-week moving average. That should hold on it. That will give support on any pullback. I mean, that's at the 133 level, the same support that I mentioned on the daily. The RSI has broken its downtrend, indicative of positive momentum on this weekly chart, and the MACD are just turning round as well. So into resistance, expect some consolidation. On the support and resistance levels, the 20-day will give the support about the 132, second support's at 130.51, and then on the resistance levels, these are from the end of December, 134.96 and 135.98. Moving on to the New Zealand dollar against the Aussie dollar, against the US dollar, you can see that the US dollar strength again. Now, reverse of the Canadian dollar here, it's coming because we're on the New Zealand side. It's coming back to support. I would expect the support that we're in to hold a decline. We're quite extended now from the moving averages. You can see the 20-day, 200 and the 50 all very close together at around about the 171.50 level. 20-day tracking downwards now is going to cross the 200 and the 50-day. So we're into a period of bearish behaviour, but it's extended from there. And also, if you look at the RSI, the level is now 30.4, so indicative of an oversold market. And the MACD is showing negative momentum, but I think it's just slightly oversold at this level, and I wouldn't be surprised if we hold the immediate support and then move back up towards these moving averages. On the longer term picture, you can see that the support coming in at this 68.95 level, That should hold. The 20-week is tracking downwards and about to track through the 50-week, which will give the resistance on the upside. They're at 71.05 at the moment. Looking at the support resistance levels, resistance 1 on any bounce at 71.43, and then at 72.37, and then those supports are coming in at 68.85 and 68.62. Pound against the euro has broken downwards. There's no getting away from the picture here, which didn't do it. I was hoping last week we may have a reverse head and shoulders. Didn't break to the upsides, now broken to the downside, broken through over the last 10 days, through the support of both the 20 and the 50-day moving average, broke the supports that we were hoping would hold 6th of Feb, so it's looking bad. For the immediate short term, one may expect a bounce up towards the 50-day moving average at 116.69, but that would be an opportunity to go short of sterling against the euro and trade to the downside. The RSI is indicative of negative momentum, and the MACD have now rolled down, so it's a sell on any rally on that daily chart. On the longer term charts, you can see it here that if any bounce will be into that resistance from that 6-week movement that we had, sideways movement through January and February. We're down below the 20-week moving average. That will act as resistance as well at the 116.43 level, and it on any rally, expect downside pressure and for the downside to be tested. On the support resistance levels, I've got 50-day, one must be the 20-day. I guess that the 116.69 is 20 and the 117.20 is the 50. And on the supports, 113.01 and 110.82. On the Aussie dollar against yen, this just looks range bound, and one would expect the sideways movement to continue. Not indicative of a market with momentum at all. The RSI just going sideways and is bang on 50 or 50.25, and the MACD are just tracking sideways, perhaps with a slight negative bias. But on the downside, you've got the uptrending 50-day moving average giving the support at 86.03. 20-day still moving up, 86.74, immediately above the market, but the market needs to get back above there for that to give a push up. But even then, there's resistance coming in at 87.37 and then 87.98. So it just looks like it's range bound and it is going to continue sideways. On the longer term picture, you can see this range bound that we're expecting is just a consolidation after the break of the downside, the long term downtrend. It could be a flag, too early to see, but I would expect it to continue sideways. When in this longer term chart, starting to see a bit of negative momentum coming through on the RSI, and the MACD are rolling over as well. On the support resistance levels, we've got the support coming in at the 50-day, as I said, 86.03, and the support at 85.85, with the resistance at 87.49 and 88.18. Finally, moving on to the euro against the Swissy, which has taken a lot of people by surprise over the last week. It was trundling at the bottom below the moving averages and was looking like it was going to leg downwards. What has it done? It's rallied, broken all the resistances, and has now actually broken the downtrend. I'll draw this downtrend on through the highs here to there, through those highs there. Come on, little marker. Urgh. No, it doesn't want to do it, so I'll there we go. Okay, so that's the downtrend, and we broke the downtrend, and we've now moved up through it. I'll just go and look at the weekly, and here you can see that very tight trading ranges through each week. Look like we're going to leg downside, now leg to the upside, but you can see it in the long-term picture. It's a nothing move. Let's go back to the daily, and you can see the break of the downtrend through the moving averages. There's a lot of resistance on the upside, immediate resistance at 107.70, at 107.75, and then above there 107.86 and up to 108.84.85. I'm not sure why I've lost my moving out, my RSI and stuff, but anyway, let's continue. Can't show the RSI, the MACD. Let's go and look at the weekly RSI, MACD. In fact, what I'll do is I'll close that chart, and I'll put it back on this one. So my downtrend won't be showing on here now, but we'll get the RSI back in, and you can see the RSI's moved back up, showing positive momentum, and that the MACD as well has rolled round to show positive positive to the upside. This rally will continue for maybe a few more days. There will be some consolidation, but it looks like with the green bodies on the candlesticks that there's a lot of buyers coming into this market now. So with the RSI ticking and showing positive momentum is very solid above 60, you would expect the move to continue to the upside. On the support resistance levels, got resistance at 107.51 and 107.89, with the support coming in at 106.58 on the 20-day moving average, and then the second support at the 106.55 level. This has been the second video today from TA for Traders. Thank you very much for watching. I'll be back tomorrow when we'll be looking at the commodity markets. All the technical analysis that you've seen in the video is for information purposes and educational education. Please do read the disclaimer that's coming on the screen now. Thank you.